Yeah. Greetings, guys.
Yeah.
How's it? How's it?
Sure,
How's it?
sure, brother.
Good. Guys,
Fresh thing.
yeah, today I plan to keep it very short and precise. I will not be wasting any time today. Just putting this mask on. Okay, wait. It's not moving. Wow. Okay. Yeah. Okay, anyways, man. I wanted to quickly just refer back to Nasdaq. Yeah. Today I tried my hand at Nasdaq and I'm actually liking it. And I think that it would be unfair for us not to actually focus on Nasdaq just since everybody is talking about it and nobody really understands how it moves or why it moves and why the things happen the way they do on the charts. Most of the time, people get thrown into the deep end, and then like especially in the South African what you call it Forex industry, people get thrown into the deep end and they are expected to fend for themselves. Yeah. And that to me just is irrational. It just doesn't make any sense. Most importantly, not only does it not make sense, it is bad conduct. Yeah. It is just it's a matter of principle, guys. Yeah. It's just bad principle. So if whenever I discover something new or I come across something interesting or a concept that I feel is worth sharing, then I will do so. Despite what anybody or any individuals or groups say, but I will still do so. Just for the mere fact that my principles just dictate that I do share. Yeah, because I know whenever I share, I get to learn the things twice. Yeah. So whenever information is shared, by the mere repetition of that information, I simply get to learn the things twice, and they get to stick to the said individual sharing the information too. That is why I have decided just a quick announcement. Every Wednesday at the same time, 6:30 to be specific. Every Wednesday from now on, we will have these market catch-ups. Yeah. And basically, I wanted to go over my loss on GJ, which was rather interesting to me, considering I actually knew it was going up. I had a monthly setup. Just the other time I told you guys the monthly setup was looking bullish. If I'm not mistaken, that was sometime 3 weeks or a week ago. But I remember specifically mentioning that the monthly candle would fill the wick and drag up to the EMA. Let me add another person here quickly, guys. Just excuse me, Bobo. Okay. So I wanted just also to give everybody an idea of how I analyze and look at losses. Yeah. And basically, without you looking at the losses like how they are meant to be looked at, you don't gain anything. My mouse is broken, I think, guys. Damn. Okay, cool. Well, that's that. Nothing. Okay, so I have to finger this thing. I'll finger the touchpad. So that basically encompasses or roughly sums up what today's agenda is about. We are basically reviewing losses. Sipho knows exactly why this is happening. But yeah, I don't want to be the type of person that preaches one thing and then does another. So basically, oh my God, we have an all-time high today. We have 7 people. Oh wow, thank you guys for attending, man. just warms my heart so much. Thank you guys. It shows support, and it shows determination, and it shows initiative on your guys' part that you actually do want to learn. Bobo, please mute yourself. I'm going to mute you. If you need to say something, you will unmute yourself. And just so to avoid the cross contamination of sound. Yeah. Back to what I was saying. I actually did see the buys. Yeah. The buys were valid just from this setup.
Okay.
I will mute you myself, Pelawan. How? This person. Okay, yeah, she disappeared. Okay, cool. Now back to business, guys. The important thing that I consider more crucial than anything else is the ability to accept and acknowledge when you are wrong, and then change your understanding to be open-minded, and basically accept that sometimes you might be wrong in the markets. Yeah, you won't always have it 100% right all the time. Yeah, and what I mean by that is, if you do expect to be right all the time, you are mistaken, and sorely mistaken too, and you will pay for it dearly. I know this from first-hand experience. I know this from first-hand experience. So, my mouse is back on. Yes. So now we can get to the business. Yes. Okay, just give me a second, guys. Migrating to a better position. Okay. Yep. Okay. So basically, we had a rejection of this price. Guys, the other thing that I will be touching base up on today is the idea of fake outs. Yeah, a fake out is basically, let me just draw it out for you guys first, so as to not to confuse you guys. A fake out is when price, let's say these are our levels. Yeah, these three lines, these three blue lines are our price levels that we have established as turning points. Yeah, as turning points. Yeah. So what happens during fake outs is that price will break above a certain price structure, and then immediately the candle that forms after the breakout candle, like this breakout candle, the candle that forms after it immediately goes back within the range. Yeah, the range. It closes, most importantly, it closes back within the range. Yeah. And what that means, I've literally just, after reviewing my losses, I figured that this is the one key that gets most traders messed up in the markets. And I feel like if you are able to understand exactly how fake outs form and what they mean, most importantly, what they mean in terms of your bias and your trade direction, we would be well off. Yeah, would be way well off. So the thing is this: whenever price breaks out of a structure, like we have a resistance here. Historically, this is a high resistance area, and it is a strong resistance area. It is a strong resistance area, and if that is the case, and we do experience a breakout like here displayed in by this candle, yeah, because we clearly see we rejected 1, 2, 3, 4, 5, 6 times. We rejected this line of 136,256, yeah. So whenever we get a breakout and an immediate rejection, again, guys, remember the concept of, as long as price doesn't go below the previous candle's low, we are safe for upside. And as long as price doesn't go above the previous candle's high, we are safe for downside. That concept is so important. It is so important, and it will make the trading fake outs way easier for you. Yeah, and it will make you basically, it will give you the ability to recognize when your trade is invalid and when your trade is no longer going in your direction. Yeah. Simply put, the fake outs can be called engulfing candles. They can be called fake outs as well. They can be called rejections. It's basically, it's a wick on the higher time frame. This is the 4 hour time frame. This is a wick on the daily. Yeah, this move down and this move up. We opened here, went all the way down, but then now we're above our open, so it is a wick. Yeah, and if you look at daily, you will see a wick. Yeah. Is it making sense for everybody currently? Any questions?
Nah, we good. I'm good.
Okay. The rest of you guys, Kyle, is the concept
Safe.
okay, safe, yeah. All right. So what happens during fake outs, guys? During fake outs, price will break a zone and immediately close above. Yeah. This concept, guys, is so easy, and it will just improve your trading by a ton. Yeah. If you simply apply it and you trust the what you call it, the analysis that you've had. Yeah. You can look at it like this too. Yeah. We have a minor support area here, which was broken by this big bearish candle. But the following candle did not go lower than the previous low. Yeah, it did not fill the wick. And we know that from experience, whenever price is in momentum, wicks get filled. Yeah. Whenever the markets are pushing and there's a lot of volume in the markets, wicks will get filled. Yeah. And we would have anticipated that this candle will open, try to push up a bit, and then drop. Yeah. Let me just quickly refer back to is okay, wait. There's a member here who's struggling to get into the into the Zoom, and I'm basically telling him to retry. Okay, resume the share. Okay. Now, what qualifies as a zone break, guys? We need a strong close below the structure that you've established. Yeah. We need a strong close below. This, to me, this close is too close to my zone, and it doesn't qualify as a strong close. What a strong close is this candle. This candle closed way above the support that was broken by this candle, but then later it was literally held up. Yeah. So again, this is where you would just adjust your support structures. Yeah, you keep adjusting your support and resistance as the candles are forming, as to keep your zones as fresh as possible. And we know that when we look left, we are looking for the most recent zones. So when that is the case, we cannot consider this area more important than this recent area. Yeah. So that is why you drag down your support. That is why you move up your resistance. That is why you keep adjusting your key levels as to make sense for you. Yeah. Again, this is the most recent area, the most recent single tap and rejection on the smaller time frame. Again, the wicks on the higher time frames are literally ranges on the smaller time frames, as we know. So you keep adjusting this. As price is forming, you keep adjusting. Yeah. Let me just erase. This is getting in the way of what I'm saying. But yeah, you keep adjusting your price key, your analysis tools. You keep adjusting your support and resistance as you see what has happened here. So again, since this candle is the most recent, what is the story that we can tell from these candles? Yeah, we will minimize this quickly just to get a clear view. We now see that, okay, we had a major resistance area here, which was pushing price down. and it held until eventually this candle, the daily candle, broke above this area, yeah, this area of 135,279, yeah. Are you guys with me? And as soon as it broke, we know from experience that whenever price breaks a structure, it will come back to what? To retest. And that is all that happened, yeah? Which is why I say it is important for you to analyze your losses. And it is important to also realize that sometimes you won't be right all the times in the markets. The markets are a game of probability. You're simply increasing your probability of being right. Whenever you trade your specific pair, you increase the probability of you being right because you've experienced how the pair moves, and you choose a specific time to trade. You are increasing. This is all the tools that you use to increase the probability of you succeeding in the markets. So again, when you are seeing price and candles form, it is important that you pay attention to the wicks and you keep adjusting your levels as the candles are forming, so as to maintain the freshest zones, the freshest key levels. You are maintaining the freshest price action points and key levels, yeah. So again, now we can see what happened here, guys. Now we can see what, okay, cool. What happened here was price broke above. We had a minor retest here. If you guys can spot this candle here. Yeah, this was a minor retest, this area. We had a minor retest. Let me add another person. Seems like KG finally. It's finally. Oh, okay. So again, guys, whenever price pushes down, it is creating a range for us to fill to what? To the upside. Yeah. How do you know when the downward movement has ended? You break down into your smaller time frames. You look at your 30 minutes, you look at your 40 minutes, you look at whatever time frame you use and are comfortable with, and you basically see here that, okay, cool, this candle was breaking lower, and then immediately after it tapped the 135,279 area, we rejected and we created a bullish candle. Yeah. Now notice this, yeah. When that candle formed, there was no attempt at breaking lower to the downside. And instead, what happened was we flipped the momentum and the candles were creating lower highs, lower highs, lower highs. They were not breaking below the lowest point of the previous candle's wick. Yeah. Are you guys still with me?
Yeah.
Okay. Let me just re-explain that again. You take your higher time frame, you analyze your structure, your trend. Yeah, we have trend lines here. We have support, we have resistance, and whenever resistance is broken, it turns into support. Whenever support is broken, it turns into resistance. Now, if that is the case, and here previously we had this support, we had this minor support here, 1, 2, 3, 4 candles were rejecting this price of 135,897. And then this big gladiator candle or the fake out candle closed and it engulfed, it engulfed the previous bearish candle. That support now would have turned in, that resistance or that support would have turned into now resistance. That previous resistance, that resistance above here would have turned into support, and that is why we're pushing up. Again, how did we know we are not going to drop further? The candle broke below and then it immediately engulfed. If you guys want more information on the engulfing patterns and what that exactly means, you can Google that on your own, using your own initiative and your own resources. For now, it is important that you guys understand that whenever a candle is engulfed, that signals a turn of momentum and it signals a change in the momentum. Yeah. And if momentum switches around, then obviously we're not going down anymore, we are going up. Is it making sense? You don't wait. You see, again, we engulfed. We were falling here. We engulfed and we continued up. Again, we were pushing up from this point. We were pushing up. This candle engulfed. Zoom in for you guys. We were pushing up from this low, this trend line tap. We pushed up, 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 and then we got to a resistance area where the candle, that single tap rejection here at the top, single tap rejection, and then the preceding candle proceeded to engulf this previous candle, signaling a change in momentum. No more are we going up. Now, instead of going up, we are looking for a retest. Look at this. We looked for a retest. We were looking for, okay, Angeti, you are marking out your single tap rejection areas, guys, yeah? Single tap rejection areas, you mark them out on your charts, yeah? And notice what happens now. Previously, we have this area here, yeah? We have this wick. Price pushed up, but then this candle engulfed. And it broke beneath the support that was created by these 1, 2, 3 candles. This is how you analyze charts. This is how you tell stories from the candles as they are forming. Yeah. And the ability of one's of one trader's understanding and interpretation of the charts depends largely on how they see the candles form and exactly what stories they can deduce from what the price is printing. Yeah, we engulfed. Obviously, momentum is flipped, and whenever we break a support structure, let me just draw it out for you guys. Let me put it a different color. Support. Yeah. Why is it support? Drag it left. You'll find out why. Yeah. Previously, it was a resistance. 1, 2, 3, 4, 5 candles couldn't break above this area. And then this one candle broke and it retested and it pushed up. Yeah. But then notice what happens now. We break lower and we engulf this candle. There's two confirmations. Yeah. We had a previous support, which was pushing prices up. And then now it has been engulfed and we have broken beneath the support. What happens when support is broken? It turns into resistance. And notice what happens. Price retests and it continues to push down. Where is it going? Look left. Where is the single tap rejection wick? Here. Yeah. But because you don't execute greedily, you aim and you have a target set up for the day and you know exactly how much you want to make, you don't expect to fill the whole way down. Yeah. You take a small portion of the range. You don't want the whole range. This upward move. Let me draw again. Let me unnote this down for you guys. This was the range created by the upside movement, meaning sooner or later we would need to fill this range. Yeah. How do we know this range is going to fill? Engulfing candle 1. We broke a structure which was previously acting as support, and then now we are retesting the structure and continuing to fill the range. We filled the range. Is it making sense? That is the trade. That is the idea that you repeat again and again and again and again. You only need one thing, guys. You don't need a lot of things. You only focus on the few, not the many. Once you focus on the many, you get distracted and then you start looking at trend lines and you start looking at, you get confused. So keep things simple for yourself. Keep things easy for yourself. and focus on what the candles are telling you. What are the candles telling you? Price has broken. Support is broken, it turned into resistance. Price resisted this support and it continued to push. Where are we going when you're pushing down? You look left. Single tap rejection, single tap rejection, single tap rejection. And you basically have a trade. Yeah. You are anticipating these things before they happen, guys. You're anticipating these things before they happen. Yeah. Now, again, let's apply that same understanding that we have here. Let's apply it to this chart, to this chunk of the market now. Yeah. Let me take my structure here. Again, let me draw it out for you guys again. We have a resistance. Yeah. Price broke above and it created a range. It created a range to fill to the downside. How do we know the range is going to get filled? We look for rejections. We look for rejections. We look for single taps, rejections. We look for single tap rejections. And notice how no candle is closing above the previous candle's high. It might wick up, but it does not close there. Look at how this it wicked up. It tried to push, but it couldn't sustain the bullish momentum and it got rejected downwards and it closed bearish. Yeah. Now again, let us just, is it making sense so far? I'm not confusing anybody.
No.
Okay. By price,
I can't speak for everyone.
Yeah. Okay. Thank you. By price pushing up, it is merely creating a range that we don't know when the range is going to get filled. We don't know when it's going to turn, but we simply focus on how the candles are printing. We focus on how the candles are printing. Yeah. And then this range, again, single tap rejection here. Let me just erase so you guys see the single tap rejection. Move this out the way. Remove. And then where's my pen? Okay. We have a single tap rejection here, guys. Yeah. Look left. It aligns. Yeah. That's all you need to do. You look at the wicks and you look left. Look at where it aligns to when you look left. And which areas are you focusing on? The most recent ones in relation to where price is currently. You won't consider these low areas because they are not where price is currently. Yeah. Let us replay this and put it to practice, guys. Let us replay this. In fact, I would like to replay this. A replay, come on, replay. Okay, cool. Let's just start it from here. This candle. Okay, we need the daily. Oh, damn. Okay, cool. Whatever. Whatever markets. Alternative. We created support. These candles were creating a support. 1, 2, 3, 4 hour candles, by the way. So definitely there was support on the smaller time frames. Yeah. And once we established that this candle, look left, look left, look left. Yeah. Look left. We have established that this area here was previously a very strong resistance. Yeah. How do we know it was a strong resistance? It tapped once and price immediately fell over 100 pips. It fell from we have 10 minutes left. It fell from 135. Why is this thing doing? Okay. We fell from 135, 926 down to 134, 300. Yeah. it fell that much just from a single tap of the 135,900 area. Yeah. Now, in relation to where price is currently, we broke above a resistance and it acted as support. Yeah. Previously, we've established that since we looked left and we've realized that it was a resistance, we now notice that, oh, it is acting as support. Why is it acting as support? In terms of these candles, yeah, these candles were they were rejecting that 135,926 area. Yeah. Why was it acting as support? Because when resistance is broken, it turns into what? Support. Yeah. Now the fake outs come in here, guys. We obviously left a range to the downside and we filled that range. Yeah. Once your range is filled, you out of the trade. You don't want to be in the trade anymore. Once you hold your trade, after you have hit your target, after you have hit your range, after you have filled your range, you are simply risking more losses. And we are not here to risk losses. We are here to preserve capital and to grow our investments. Yeah. Making sense? Okay. Once we have established that historically, historically, when we looked left, price was resisting 135,926, and then this candle, this bullish candle, broke above that 135,926. So what needed to happen was we needed to retest this and push up anyways, just due to this major bullish candle. Yeah. We anticipated that what was going to happen is we're going to push up to fill the wick here. Yeah. These are all the things that you pay attention to as the charts are moving. This is why it's important for you to watch how the candles are forming. Yeah. Resistance broken, turned into support. But then this bearish candle here, it broke that support that was being created by 135,926. Yeah. This is what a fake out is. Once that support was broken by this candle, you look left, and while this candle is forming, you're looking left to see where possibly it might reject from. Since we know this is simply a retrace down for further upward momentum, you look left to see where the best entry for your buys would be. And we've established that resistance, this is a resistance area historically. Once resistance is broken, it turns into what? Support. Yeah. And as price is forming, you are looking at all the areas in relation to where price is at that point, at that moment in time. You are looking at all the areas to the left where price has resisted before. Because if it has resisted before historically, it will now support the price to push up. Yeah? Making sense? We will do another webinar tomorrow to explain exactly the same thing. But for now, I just wanted you guys to have an understanding of what fake outs is. The fake out happens when this candle breaks the support, minor support here. This is the major support, yeah. Major support, minor support, yeah. Once that minor support was broken, you knew it cannot sustain any downward momentum. And if any more downward momentum occurs, it's simply allowing buyers better entries. That is why this next candle didn't even try to go lower to the bottom wick of this big bearish candle, and instead it rejected. Look left again. It rejected. You see, guys, seeing where it rejected, it was rejecting a resistance level that was broken, and now that resistance level is acting as support. So what happens when you buy support, you sell resistance? You buy support, you sell resistance. Yeah. Notice what happens. This momentum, this bullish momentum was so much that we ended up closing above that support. We ended up closing above that broken support by this bearish candle. And that is the anatomy of a fake out. Yeah. Even to the downside too. Again, we'll explain it here. Even to the downside too, it works the same. As soon as we have support, price breaks below. As soon as we have support and then price breaks below, but immediately closes back up, you know what's going to happen is we're going to retest and we're going to push up. You know what this pattern is called? Your head and shoulders pattern. You guys understand how it's formed now? Yeah. It's basically a bunch of fake outs. Yeah. It's a bunch of fake outs. So again, what is a fake out? A fake out is when price breaks a structure. It breaks a structure. This is the break of the structure, and it closes immediately back within the range. It closes back within the range, and notice what happens. It retested and it continued up, because when support is broken, it turns into resistance, and when resistance is broken, it turns into support. Where are we going? As you buy here, seeing this big engulfing candle, where do you buy? You buy the retest. Where are we going as price is pushing up? You look left. Where are the single tap rejection wicks? Here at 136,450. And it filled the range. Again, the range was down. It created a range and it filled the range. When do range fills happen? When price is in momentum. 3:30, 12:30, 9:50, all of these times, 8:50, 7, London open, New York open, London close, New York close. All of these times are high volatility times, guys, and are the most high probability setups happen during these times. Yeah. And you guys would have seen I had sells, I closed, and I told you guys, put your stop loss, go break even, and let the others run. Yeah. You secure 50% of your position and you put your stop loss at break even, and then you let it go. You are done with the trade because your trade was right. You analyzed right. Price was at resistance here. And it fell to fill this range, and you are done. That's the trade. You are done. Yeah. Immediately you see this engulfing candle. You see the engulfing candle. You know, hey, maybe now momentum is flipped. And what am I supposed to be looking for? Buys. Where are the buys going? They're going up. Yeah. Up to where the single tap rejections are. Am I making sense, guys? With that said, my time is up. I'm so sorry I have to cut it short, but Zoom does have a 40-minute limit. Again, just try to apply these concepts on your own, guys, and let me know if you need any help with it. Hit me up on my WhatsApp, and I'll definitely be able to explain it more. Yeah, it's a fake out, an engulfing candle. That is what it is. I just have an easier way to explain it. So again, guys, thank you for attending the Zoom. It has been fun. We'll do this again tomorrow. Thank you.